The PGM complex has caught commodity investors by surprise in 2025, with platinum specifically emerging as a standout, recently surpassing gold as the best performing commodity of the year to date with a gain of more than 30%. And the platinum rally has gathered pace over the past 2 months, augmented by surging demand for jewellery and a growing consensus that major industrial sectors where platinum is a key input, such as the catalytic converters needed to manufacture hybrid vehicles, are actually supported by positive long-term demand trends. Add to that the production challenges facing the platinum supply chain, along with limited recycling and no major new mines, a mix which is serving to cap supply growth despite rising prices. In recent weeks, commodities powerhouse Sprott Asset Management published research arguing that platinum is on track for a significant status upgrade, as the market faces the prospect of a third consecutive year of major supply deficits, threatening to deplete above-ground inventories within 3 years. And so, after more than a decade in relative obscurity, platinum is roaring back to life, and it is dragging its PGM contemporaries palladium and rhodium along for the ride. Palladium is up 19% this year to over $1,000 an ounce, while rhodium, recently dubbed the canary in the PGM coal mine by representatives of South African mining major Amplats, is up approximately 22%. Against the backdrop of swirling PGM tailwinds, World Platinum Investment Council Director of Research Ed Stirk told InvestorStream that demand for platinum is expected to outstrip supply by nearly 1 million ounces, as consumers start to view platinum as an alternative to gold.
In terms of demand, we're seeing quite a pivot really in terms of jewellery market. This is very much linked to the extremely high price of gold, and it's kind of driving the jewellery market in 2 different ways. So firstly, in Europe and in North America, to a lesser extent Japan, markets where you've got quite a big white gold component to jewellery demand, we're seeing at the retail level platinum now being priced at a discount to white gold. Now, given that white gold was originally developed as a lower cost alternative to platinum, that's something where for most consumers platinum is still considered to be the premium product, and so if you're given the option of a white gold ring and a premium to a platinum ring, most people will choose platinum as their preferred choice. So that's driving pretty decent demand growth in those markets. In China, that's where we've seen a really strong pivot. It's for slightly different reasons. China's very much a yellow gold market. You don't have the same sort of white gold component there, but consumers are just being pushed towards platinum as the alternative to 24 karat sort of investment grade gold jewelry, and that's just somewhat on a cost basis, but it's also on a price risk basis. Consumers in China are more worried about the downside risks in gold, and they see more upside potential to platinum. Like I said, this is a sort of investment grade jewelry sort of chain, and it's also quite linked to investment itself. So we're seeing strong investment demand for platinum coming through from China as well.
It's quite the transformation for platinum, as those headwinds turned into tailwinds driven by a number of key catalysts that are impacting across the PGM basket.
So for platinum, it is jewellery linked, and it is linked to investment demand. We are also seeing some potential tailwinds in terms of emissions legislation for internal combustion engines, which could drive increased loadings for PGMs in the catalytic converters. Platinum's a potential beneficiary of that, but it also influences palladium and rhodium as well. So these emissions changes that are mooted at the moment, but not confirmed, are effectively within China tightening up on the cold start emissions testing, which would force the catalytic converter manufacturers to increase their loadings. And there are some potential changes coming through in the US as well, which will focus more on nitrogen oxides and try to suppress the emissions of those, which again could result in higher loadings per vehicle. Platinum and rhodium are probably the bigger beneficiaries of the NOx emissions regulations, whereas in China it's likely to be sort of more broad-based and including palladium as well.
According to Stirk, while production challenges remain amid surging demand, any new players in the market looking to bridge the production gap must be convinced of the medium to longer term demand profile.
For the PGM industry, it is a complicated question to answer. All of these metals are produced as a basket from these mines, so they're not produced in isolation. As a result, although we're seeing the strong sort of demand growth for platinum, we've got ongoing supply-demand deficits for platinum. For the other metals, you've got to look out over the medium to longer term and think, well, what does the sustained demand profile look like? I think that, well, certainly on our estimates, we're likely to see higher for longer internal combustion engine demand, mostly hybrids, and that's linked to sort of slower consumer uptake of full battery electric vehicles. So as a result, on our forecast, we're expecting relatively sustained demand in terms of automotive demand for platinum. So a fairly small sort of sliding more than negative 1% CAGR in terms of that demand profile. As a result, the demand outlook for all of these metals is pretty robust. Challenge for palladium, and to a lesser degree rhodium, is that most people are forecasting quite a big increase in recycling growth. So that's where PGMs are recovered from the spent catalytic converters extracted from end-of-life vehicles. Whilst that recycling growth is expected to be quite a big and meaningful part of the supply profile in the future, it's worth noting we're just not really seeing it come through. So everyone's expecting this recycling supply to come, but every time we update our numbers, we're having to push back that growth curve. So as a result, we need more mined palladium and rhodium present. I think there's probably a bit of an opportunity there for some new entrants to come into the market, but they've got to be fairly convinced of the medium to longer term demand profile.
While the prospect of no new major mines makes for a production headache, Southern Palladium is riding the wave of PGM tailwinds as it prepares to develop its Tier 1 flagship Benyama project in South Africa's Bushveld complex. Given around 3/4 of global supply comes from the Bushveld complex, the current market dynamics have prompted increasing investor interest in emerging Bushveld producers like Southern Palladium, particularly if the sector remains in a structural supply deficit as the demand cycle turns. Shares in Southern Palladium are up more than 200% in the past month, with the share price nudging almost 70 cents recently off the back of promising news flow that included a well-supported 8 million Aussie dollar placement and the environmental approval for a mining right at Benyama, a critical first step towards the mining right in itself. Southern Palladium is also in the process of refining the development pathway outlined in its comprehensive pre-feasibility study released in October last year. The original PFS produced strong project economics, generating an NPV of $1.06 billion, an internal rate of return of 28%, and a payback of around 3.5 years on average production of approximately 400,000 ounces per annum PGMs and 350,000 tonnes per annum chromite concentrate for a 29-year mine life. It could provide a significant boost to a lagging South African supply chain, and given the dearth of supply options juxtaposed against the surging demand for PGMs, the runway for growth is becoming clear for Southern Palladium.